Welcome to this week's look at the state of the New York City real estate market, where I take a look at the luxury market, the Manhattan market, and the Brooklyn market. I do it because I want you to be informed. It never hurts when you're a consumer to be informed. Welcome to this week's look at the state of the New York City real estate market. This is for the week of September 19th to the 25th. I just want to take a moment and to say a couple things. One, I had some technical issues with my YouTube channel, and some of you wrote to me and said the channel had disappeared. So I think we got it all worked out. It's slowly coming back to life. Hopefully we won't have any more trouble with that. I also wanted to say that there have been requests for additional kinds of information, like the median asking price, the median price per square foot, that kind of thing, kind of market-wide for Manhattan and for Brooklyn. And so I've included some of that this month. We'll get to that later on in the charts. So let's get started. Let's start with the luxury market, as we always do. There were 16 contracts signed. That is 4 fewer than the previous week. Now, again, remember, this is for Manhattan, and this is for properties priced at $4 million and above. Condos outsold co-ops 10-3. There were 2 townhouses and 1 condo in the mix. It should be noted that July and September are historically the worst months in the luxury market, and the third quarter is typically the worst quarter of the year. So, interestingly, perhaps surprisingly, given the rising interest rates and the tumbling stock market, this September has managed so far to ink 66 contracts in the last 4 weeks. That is quite a performance. It's on par with previous Septembers. 2019, for example, was a bit of an outlier at 51 deals, but 2018 had 68 contracts, 2017 had 65, and 2016 had 66 contracts. So all things considered, we are doing actually quite okay from a historical perspective as it pertains to the luxury market. Let's get to the number 1 contract this week. It was a townhouse at 182 East 64th Street. It was asking $10.95 million. It was reduced from $12 million when it was listed in December of 2020. So it's on the market for quite a long time. Of course, that was a terrible time to be coming on the market. And probably took a little while for the market to catch up to it. And also they adjusted their price. So that probably had something to do with the amount of time it was on the market as well. It's a 25-foot wide house. It has almost 6,900 square feet. It's been divided into 4 floor-through apartments, and it is being delivered vacant. The annual property taxes are a whopping $185,000 and change. And the seller is the estate of Jane Reitzman, a legendary philanthropist who lived at 825th Avenue and who unfortunately passed away in 2019. Okay, let's move on to the number 2 contract. It was Unit 10 at 520 West 28th Street. It was asking $10 million. It was reduced from $13.5 million when it started marketing off of floor plans back in 2015. The unit is on the 6th floor. It has 4,220 square feet, includes 4 bedrooms, 4.5 bathrooms, and a 246 square foot balcony. It's in a new 11-story, 39-unit condo building. It's designed by the late Iraqi-born architect Zaha Hadid, who passed away in 2016. She was the first woman, by the way, who won the Pritzker Prize back in 2004. This was Hadid's only residential commission in New York, and it has a bold contemporary design. It incorporates handcrafted metals, glass curtain walls, curved balconies, all overlooking the High Line. Amenities include a 75-foot saline pool, a separate cold plunge pool, spa and fitness facilities, a garage that uses Get this, robotic technology instead of an attendant to park cars. Oh, that's funny. I would like to see that. All right, moving on. Quick stats. Let's talk about the total weekly asking price sales volume, 107,075,990. The average asking price, 6,692,249. The median asking price, 5,950,000. The average discount from original ask to last asking price, 15%. Yes, that's right. You heard it. 15%. Wow. I don't think we have seen that kind of discount since I've been reporting. Usually we were hovering around 4%, inched up at times to 5, 6%, sometimes 7%, 15%. Wow. Okay, maybe it's just this little group of properties that went into contract this last week, but very interesting and kind of startling. The average days on the market, 783. Well, these two properties, the number one and number two contracts, have been on the market for quite a long time. The first one since December of 2020, and the second one, they started marketing this back in 2015. Let's keep an eye on the luxury market. That's it for this week's look at the luxury market. Let's take a look now at what happened in Manhattan. Let's take a look at what happened in Manhattan. I just want to stop 1 second and say, if you have any questions, please post them below. I'm always happy to answer your questions. And as a reminder, I report on these stats every week because I want you to be informed. If you're a buyer, if you're a seller, if you're just a property owner, not just a property owner, but you're a property owner, you want to know how the current market is affecting your position. If this is information that has been helpful to you and continues to be helpful to you, please subscribe to this report. Also, feel free to share it if you know someone that you think it might benefit, because why not spread the information around? We're going to take a look, we're going to step back and take a look at what's going on with the trends right now in Manhattan. We know it is a neutral market. Buyers, it may not stay a neutral market forever. When we get into the statistics and we start talking about supply and demand and all of that, if you're really serious about buying right now, you don't want to be just sitting on the sidelines thinking that this is going to go on forever. It's not. Nothing stays the same. But in this case, we are definitely seeing signs, and we know that we're heading into a time where we do see more active market. October, November. September is always the sleepy month. So I've said enough about that. Let's take a look. The supply, basically it's on trend for the season. We did see a kind of a pop after Labor Day, properties coming on the market. Now it is sort of slowing down. Are we going to see more properties coming on the market? Hard to say, but the inventory, the resupply of the inventory is definitely trending downward. So need to keep an eye on that. Again, buyers, that's a cue. We're not seeing tons and tons and tons of new inventory pouring into the market. That means there's going to be pressure on this market. Sellers, that could be good news for you, but as always, be careful with your pricing. The demand is down a bit. It is kind of just settling into what is normal. We had this kind of crazy recovery period post-COVID, 16 months of very, very frothy kind of market. Lots of inventory, people just rushing in, and lots of contracts signed. We're not seeing that anymore. And it probably feels a bit to some like nothing's going on, or maybe to some it feels like we've slammed into a wall. We have not. This is normal. And now we're just settling into what is historically kind of normal pace of the market. The pending contracts, this is tied to the demand. And again, we're seeing a kind of a reset on that as we're kind of returning to these more normal market conditions. We do need to keep an eye on October and November. That will tell more of the story about what's going to happen in Q3. But again, if you're a serious anything buyer or seller, be sure that you are in alignment with what's happening in the market. Buyers, don't sit around thinking that you're going to get a steal of a deal. You're not. Sellers, don't think you can be too ambitious with your pricing. You're just going to end up sitting on the market. Let's take a look at this kind of market-wide, all property types, townhouses, co-ops, condos, all price points, all supply. This is a monthly look at the Manhattan market. You can see the supply is up 11.4% from the prior month, but it is down just a weensy bit from the prior year. You can see we're tracking the pending sales. Again, you're looking at the market pulse, average days on market, which has been about 62, so a couple months. And one of the things that I want to focus on, for those who've been wanting to know, what's the kind of average square footage price in Manhattan at all price points? Currently, it is about $1,426. You can see that the median sale price is $1,160,000. I hope that these particular charts, because they provide more details, will give those people who are looking for kind of a more macro view of the market some additional information to go by. Any questions, please let me know. We're going to take a look at, now that we've looked at the macro version, let's take a look at the 1 week look. So what happened last week? 425 properties came on the market. That is down 25.18%. There were 169 contracts signed. That's up about 8%. Off-market properties, 167. That was a bit of a jump, almost 24%. Again, we are in this neutral market. I think it's helpful to look at both the monthly and the weekly view because they each provide their own kind of insight to what's going on in the market. I want to take a shift now and let's start looking at these supply charts and demand charts. So because this gives a little more history, right? So this supply is kind of showing from 2019 to 2022. We can see that the Manhattan inventory is ticking up again. It's in line with last year's trend. The demand, the pending sales are resetting, as I mentioned. They are lower again as the peak kind of fades out. We had a very, very active market in July, and it's gotten a little quiet since then. The new fall deals have yet to close out, so we are really just waiting on those numbers. The new listings, the weekly new listings are also ticking down, but again, this is typical of the initial spike after Labor Day, and then it kind of trickles off, fades out, call it that. That is typical of what happens in the fall season. So with regard to new listings, the overall number of new listings in 2022 has now fallen below 2021. And the contract sign, the weekly contract sign came in below last year. But again, this is typical of the season. Don't put much store in it unless, of course, it continues as a trend. Total contract sign continues in a relatively flat way. Last year was crazy, and we are not seeing evidence of that. Again, October, November will tell the rest of the story for Q3, but let's see what happens. So with regard to the deal volume and how those are trending, the monthly demand is essentially back to average. I mentioned this before. Take a look at this chart, the deal volume trends. The monthly demand is essentially back to average. If, after we hit this kind of low, when we compare it to the historical average, the Manhattan deal volume is essentially kind of back on track. Let's take a look at this. Buyers, I started the Manhattan section by talking about the opportunity for buyers right now. We have now seen a couple of weeks in this neutral market. We were very much in a seller's market previously. As we move further into the fall, it remains to be seen whether this will create the same kind of opportunity, this market, for buyers as it is right now. So please, buyers, if you're thinking about doing something, do not hang around waiting because you may just miss your opportunity. Keep a very, very close eye. You can continue to listen to these reports. I will tell you everything that I know about what's going on. So just please, I want to be sure that that I say this. All right, that's it for Manhattan. Now let's take a look what happened last week in Brooklyn. Okay, now let's take a look at what happened last week in Brooklyn. Supply is on the rise. We are seeing the demand down a little bit, but October will tell us a little more about how the buyers are feeling about this market. Buyers, this is the first time we've seen a neutral market. This is a very good time for you. Don't miss this. Leverage it because it won't last forever. All right, that is a bit of a little bit of a overview of what's going on in Brooklyn. Brooklyn has continued to fare better than Manhattan. In part, it's because we do have a kind of different inventory in Brooklyn. There are more townhouses or single-family homes, brownstones, and those have been really driving the Brooklyn market. We're seeing a bit of a steep decline in the co-ops and condos in Brooklyn. So that's interesting and may go a long way to explain why the Brooklyn market's been faring better overall. Let's take a look. We're going to start with the monthly chart, the overview of everything in Brooklyn. The supply, 3,427, that is up a little over 4% from the prior month, but down about 19% from the prior year. Again, for those people interested, you can see that I've shared price per square foot. 1,013 is the median price for August. That's our most recent information. And again, for August, the median sale price in Brooklyn was just around 979,000 and change. And some of these, and the other charts talk about the days on the market, median listing discount, the absorption rate. This is great for those people that have been very curious about wanting more information, a lot of information that is frankly kind of hard to track. Let's take a look now, the 1 week look in Brooklyn. The weekly pace, the supply is 246. That's up about 9%. Contract sign 104, down about 24%. Off-market properties 74, or down about 14%. As I said, this is a neutral market. Buyers, this is your moment. Leverage it. If you're a serious buyer, if there's something out there for you, this could be a very, very good time for you to make your move. Now, let's take a look at the supply. The Brooklyn inventory has ticked up, as I mentioned. As the fall listing season continues, we are seeing an increase in the supply. We are seeing the pending sales going lower. So the demand is down. We have old sales that have closed out, but we're waiting on those new sales. We need that information to see really where we're at as we head into the fall. The pace of the new listings in Brooklyn has increased, but they remain below last year's levels. Contract activity is about on track for what is typically a pretty sluggish month in real estate in New York City, September. And so as September draws to a close, we're going to see what October brings. Let's take a look at the pulse in Brooklyn. As I mentioned, we are in a neutral market. Buyers, this is a moment in time. October usually brings an increase in contract activity. So if you don't want a lot of company, this could be your moment to make your move. Let's talk about this chart, the Brooklyn resale pulse by property type. So we have 3 property types: co-ops, condos, townhouses. We are seeing that each of these property types has seen a slight uptick recently. So if you take a look at this, you can see that for any bedroom configuration in the co-op, condo, townhouse market in all of Brooklyn, if you take a look at this chart, you can see how things are trending. And I will say this, there are more townhouses in Brooklyn than there are in Manhattan, and that really has been driving the Brooklyn market in many ways. Very likely, we're going to see that there will be more of a steeper decline in terms of activity for co-ops and condos in Brooklyn. Really the townhouses really have been driving the market in Brooklyn. Those will probably continue to do well, whereas the condos and the co-ops going forward may well see a steeper decline. I want to talk for a second about a 30-day look at the contract sign pace. So if you look at the contract sign pace, as with Manhattan, the Brooklyn deal volume is settling down. It is going back towards its historical levels. We had such frothiness in the market, both in Brooklyn and Manhattan. But as we can see now, if we take just a 30-day look at the signed contracts in Brooklyn, we can see that this is trending towards the historical levels rather than what we were experiencing during the recovery from COVID, let's say back in the spring. Okay, that is it for this week's look at the state of the New York City real estate market. As always, if you have questions, please post them. Feel free to subscribe. Feel free to share this report with someone you think it might benefit. Reach out to me with any questions. If you'd rather not post them, you just want to email me and ask me your questions, I'm happy to answer them. I'll be back next week with more up-to-the-minute news about the luxury, the Manhattan and the Brooklyn markets. In the meantime, take care.